God show me the way, cause the devil tried to break me down. I wanna talk to God, I ain't afraid.
What is up, ladies and gentlemen? I'm back with another Gucci Mane video. It's your boy Kane Ruiz, the entrepreneur, guys. We're going to be talking today about obviously stocks. What are good, safe stocks, and what are some stocks to avoid? Now, we're going to be serious. I've been, in a lot of Facebook groups that are surrounding by stocks, and I'm seeing everyone buying penny stocks and trading options and doing all this stuff that's really not necessary to gain money. And the goal in the stock market is not to gain money as fast as you can, and the goal of stocks is not to hurry up and become a multi-millionaire and you're only 20 years old and driving a Lamborghini around flexing on your friends when you could actually put that $200,000 you spent on that Lamborghini into stocks in the first place, but you just want to flex on YouTube. Like, this is good wealth. This is safe wealth that we're building right here, right now. I think that's why a lot of people, even though I don't have a lot of subscribers, or sometimes I don't get a lot of views on my videos, those loyal viewers, thank you guys very much, watch my videos because I'm so transparent. I show you guys my one day to all my all time. I'm not sitting here flexing, showing you guys, a Lamborghini or a Porsche or anything, because I don't have that stuff. I am just literally like the rest of you guys. My YouTube money is not, I don't make no money off YouTube. So YouTube money is not supporting me and supporting my stocks. This is the average daily American is what I'm doing. I'm coming, I go to work, then I take that money and I invest in stocks, just like 99% of you guys watching this is doing. You know what I'm saying? But will eventually, maybe I'll get big? Yes. Maybe eventually I could be driving around a Porsche? Yes. But this is showing you the baby steps. I'm 20 years old, about to be 21 this year. So don't get discouraged, ladies and gentlemen, when you see a 20-year-old or a person, that is like 8 years, 30 years ahead of, 30 years ahead of you, coming around with the Lamborghini and Porsche, materialistic things, because materialistic things don't really matter. Your well-being and your happiness matters, and money does not bring happiness. But I like the freedom that I get, and even though I don't like money at all, we have to obtain this so we can obtain that freedom we get. Financial freedom and stuff. So we're gonna hop in today, guys. Yes, we're sitting at $10,471. Did I add any more money in? No. I did spend some more money on some stocks, though. Obviously, a buying power is not past 1,000; it's half that. So we're gonna get in what we buy after we go through my one day to my all time. So my one day, basically, it was Friday. This is Saturday morning. Basically Friday, we were up basically like $15-16. The past week we were up 4.52%, $452. Past month we were up 7%, $697. Past 3 months we were up 11%, so $1,099. My bad. Oh, shoots and ladders. And then the past year we were up 27%, $2,287. And then our all-time is 24%, $2,077. So I want to go to the year. I think the year is more transparent. So this is how a graph should look like. This is how a safe, good, money growing, rating. This is what your graph should look like on Robinhood. If you're investing, like how I am, safe, making safe investments, not always buying all the stocks at 52-week high and 52-week low, but just continue adding a little bit of money. This is how your stock should look like. It should look like this, or kind of like stepping stones, like on the stairs. You know what I'm saying? Because I see people's stocks that are just like I really don't have one, but that just shoot straight up, basically. That just shoot straight up, and they made like 2,000%, and in a matter of a week, because they're doing options trading and stuff. Ladies and gentlemen, as fast as that money comes is as fast as that money can go. I'll just say this again. As fast as that money comes, as fast as that money goes. I saw a guy that was going good for a whole entire year. I think he got like 10,000% in 1 year. Going good. He was going good. Boom. Made one wrong options trade. Put in 90% of his money in. Guess what? That portfolio basically went to almost zero. I think the kid had like $2,000 left. $2,000 left. And I'm like, dude, that's what we don't do options trading. Here's the thing. You can do options trading if you want. You can trade options if you want. You can day trade, swing trade, but only with a limited amount of money. So let's say you're comfortable with losing $300. Okay. If you're comfortable with losing $300, trade with that. That's what you do. Options trade, or trade with that. And then bet if it's gonna go up or gonna go down, or bet if the price is gonna go up or gonna go down. So you can day trade or options trade, whatever it is, and be comfortable with that and get consecutive constant returns on your money. And then decide to go up a little bit more, like an extra $100 or $200. You know what I'm saying? And then be consecutive with it, and consecutive, but make sure you constantly get them same numbers, anywhere from 3 to 5% or even more. But don't be putting your whole entire portfolio at stake just for you to make quick money. Quick money is not what we're here for. Warren Buffett did not make quick money. His money grew over time. Okay, so let's get into this. We still got 2 shares of NRZ. I'm actually thinking about maybe selling NRZ. I don't know yet. We'll talk about REITs in my next video. Why I don't really care for REITs, and why I don't think REITs are really safe at all. So Goldman Sachs still going all right. Microsoft still going all right. Baba, $88, not bad. Facebook, $420. Hey, Blazing. We got O. So alright, doing alright. SPHD, IDV, BSM, doing alright. Gain, alright. Apple is another. Apple Hospitality, not actual Apple. We might be getting rid of that because I just don't want REITs anymore. SBGL, alright. Apple, alright. Coca-Cola, alright. Kraft Heinz, okay. Groupon, alright. Bank of America, alright. AGNC, we might be getting rid of that one. BX, good. DWT is doing better, even though we're still down $471. AT&T doing pretty good at $48. It's doing alright. Johnson & Johnson doing pretty good. Keystone, pretty good. Luckin Coffee, pretty good. Uber doing alright. And then these are just some of my free stocks, like WPG, okay. LLNW, okay. Now these are the 3 stocks that I added, 3 different companies. So VYM is a Vanguard High Dividend Yield ETF. But this actually here, I want to see if it says it. It excludes REITs. It excludes REITs. That's why I got it. It pays a decent dividend of 3%, which I think is good. For the past year, it's been up 17%. For the past 3 months, it's been up 6%. Past month, at 1%. It's just been overall around pretty much good. Past week, blah blah blah. Past this, even though we're down a little bit, I'm not really worried about it. Past 5 years, it's up 36%. You know what I'm saying? So even though it's a high dividend yield, we're still getting our dividend, and it's still a decent growth stock. Within a year, you're getting 17%. I mean, a good year is anywhere from 5 to 10%. So it's still doing better than a good year. Okay, C&Q. If you guys have ever watched the movie The Big Short, love that movie. Actually, that's the first time I watched it. Watched it recently. I think this week I watched it. And guys, you gotta watch it if you love investing. It's Michael. But anyway, one of the main characters in there, Michael Burry. He was short in the mortgage the mortgage crisis, thinking that basically there's going to be a mortgage crisis because everyone's, everything was all chaotic. This is actually one of his holdings in C&Q, and he believes that we're in a stock market bubble, or a stock market bubble, a kind of he feels like a lot of stuff's overpriced, which I agree with him. And he feels like these what are they called? Let's go back to VYM. He feels like a lot of these index funds, that's what they're called. My bad, sorry guys, my mind just went crazy. These index funds are overvalued too, and it doesn't really support the growth of that company, you know what I'm saying, with the good and the negatives within the company. So C&Q has like 900 something million barrels of oil in their reserve, which that is a liquidated asset that they can get rid of that as fast as possible. And if anything happens, they could get their money, soon. So I bought 8 shares of that at $32. It's down. I'm down 1%. I don't really care. But C&Q, I like their stock. Good balance sheet. It's 84% buy, guys. It's just overall pretty great. It's pretty great stock. The dividend's safe. The payout ratio is really safe. It's like the dividend is 3.60, so you're looking almost like close to almost 4%. So pretty good. Past year up 19%. Past 5 years, we were up 6%. Past 3 months up 26%. So it's going pretty good. Can't complain. EPD, Enterprise Productions. This one's a good stock, even though I'm down 0.11%. This one's 100% buy. The dividend yield is 6.14. This is a safe dividend. It's better than a REIT. I bought 6 of them. They're really good. It's a holding company which engages in production and trade of natural gas and petrochemicals. It operates through the following segments: NGL pipeline and service, crude oil pipelines and service, natural gas pipelines and service, and petrochemical and refined product services. So it's 100% buy, ladies and gentlemen. There shouldn't really be a selling rate because it's 100% buy. But anyway, they pay a good dividend. For the past year, they're up 5%. For the past 5 years, they are down 21%. But I feel like you're getting a fair value with this company. A fair value, and I feel like it's to be honest, undervalued right now, even though it's down $7 the past 5 years. Commodities and liquidated assets like oil and gas, you know what I'm saying? Really, this company will make its money when fossil fuels are starting to become extremely limited. Same thing with C&Q. They'll make their big bucks when fossil fuels and oil and all that stuff becomes limited. Okay, that's when they're gonna make their big money, and they're paying a dividend. So I like that. So that's basically our stock market portfolio. Sitting at $10,471. Can I complain? No. People ask me what my goals are. It's just to upgrade some of my strongholds. I want to put more money in Bank of America. I want to put more money in AT&T. I want to put more money in Johnson & Johnson, and Coca-Cola, maybe some Ford and some SPHD. That's really what we're trying to do. Maybe a little bit Uber. But yeah, that's what it is. That's what it be. That's probably gonna do it for this video, guys. Now, after this video, we'll be coming with videos every other weekend. So don't expect a video next weekend, but the next weekend after that, expect a video. And we will be doing our M1 Finance, our next video. And then we'll be talking about, safe dividends and blah, blah, blah. The next video after that, guys. So anyway, guys, I love you guys. Have a blessed day. Have a good weekend, guys. You guys are awesome. Thank you for everything you guys do. Thank you for support. Please leave a comment down below. What is your goals for 2020 in your stock market portfolio?